Hi guys, welcome back. Today we'll be taking a look at the Hong Kong market. Before we begin, remember take a second to give the video a like and subscribe to stay updated with the market. Do note that do not provide any buy or sell calls, but focus on potential traps set up by the market makers. Without further ado, let's take a look at the Hang Seng Index. So currently the Hang Seng Index is up about 1.5% and is trading just below this $20,000 psychological support level. So let's take a look. After breaking down this 38.2% at 19.8K, we tested this last support at 23.6% at 19.2K, just above this $19K psychological support. So you can see that thereafter we see a rebound back up to close this gap. There was a first gap here, but a second gap that needs to be closed is from here all the way to 20.7K. The resistance to watch currently as now 30.2% is at 19.96, or essentially the 20,000 psychological resistance. Thereafter will be 20.2K, 20.4K, and also this 20.8K to close the gap. Even if we do cross this 20.4K, we may turn bullish, but not forgetting there is still this blue conversion line here that is acting as a very strong resistance for the Hang Seng Index, and it's currently about 20.2K, and also this red baseline acting as a very strong resistance, 20.85K. So long as we do not cross these two, then it's unlikely for us to remain bullish. We can take a look here that on the past few days rather, that this red baseline is acting as a very strong resistance for Hang Seng Index. So if we do not cross this, then do not expect us to continue to become bullish. For the supports to watch, it will be this 19.178, and thereafter it will be heading towards this, after breaking down this 19K psychological support, we're likely to see this 18.2K being retested once again. So let's take a look at the Hang Seng Tech Index. So the Hang Seng Tech Index is up slightly higher, around 4%. If you look closely, we already have broken down our last support. So the bears were actually really dominating this index. We broke down our last support and tested it twice. So there was some potential stop hunting here and also some potential stop hunting here, breaking this last crucial support at 23.6% at 3798. We saw a first rebound here, but not forgetting this is a lower high compared to this high. So this is also another lower high. So if we do not break up back above this 45.15, then it's likely for us to be creating another lower high, which is not a good sign for this Hang Seng Tech Index. We can see that this is a lower low here, this is a low, so this is a lower low, and this is a lower low. So as of now, the trend is still down, and the trend is likely to remain unless there is a catalyst or unless we can break up certain resistance and start creating higher highs and higher lows. So let's take a look at some of the resistance to watch for the Hang Seng Tech Index. Currently, we just crossed this 4,000 psychological support level, and it's likely to be heading towards this 46 has already been crossed. So we will be looking at the 50% resistance at 41.35, followed by 42.25. And next resistance will be 43.53 before retesting the high of 45.15. Not forgetting there's also this gap here that has yet to be closed. The low of this candle is 42.51, and the high of this candle is 41.14. So there's around a 50 point to 100 point gap that needs to be closed. If you look closely, there is also these two particular resistance that we'll be watching closely, which is this blue conversion line at 41.35 and also this red baseline at 42.64. So at this 50% at 41.35, there'll be a very difficult resistance for us to go through. Even if we do go through, there is this 42.25 to watch out for, and also this red conversion line 42.64 to close this gap for this Hang Seng Tech Index. As for the supports to watch, we will be looking at this 4,000 psychological support, thereafter 39.35, and also this 37.55. If you were to break down all of these supports, then unfortunately, we're likely to see back this 34.63, which is this 52-week low. So let's take a look at some of its components. So the Tencent is currently up about 3%. It seems to be like holding up the index quite a bit. So let's take a look at some of the supports coming in for Tencent. So you can see that from a low of 297, it went to a high of 403.6. Once again, it hit its last support at 23.6% at 322. So essentially, it's really very weak. While the bulls are trying to struggle to hold in place, the bear seems to be dominating this particular counter and still very, very strong. So we shouldn't be too happy for now. Recent swing is 330 to a high of 388. So let's take a look at some of the resistance to watch out for Tencent. Currently, it just crosses 30.2% at 352. Next resistance to watch will be 359, 365, 375, and thereafter test back this high of 388. Not forgetting, you can see that these blue and red lines are actually blocking this particular very hard resistance for Tencent, which is at 358.1. So long as we do not cross this 358.1, we cannot continue its uptrend momentum. And if you look at this, there is also a gap here that needs to be closed. The bottom of this gap is 366.4. And the high of this is 347. So there's about a 20 point gap $20 gap here that needs to be closed for us to continue to remain bullish. So if you can see, if we do not start creating another higher high here, then unfortunately we may be creating another lower high, which is not very good for this counter. So we have to start breaking up above this 375 for us to create a higher high rather than a lower high. Supports to be watching for Tencent will be 330. After 330, we're likely to be seeing this 322.2 once again. Or if not, we'll pull back down all the way to the $300 psychological support and we test the lows of 297. Moving on to Alibaba, one of the components as well. You can clearly see that the market makers are not pushing this Alibaba, rather they are pushing Tencent to hold the index. We are clearly not moving at all. 23.6% is also once again tested after breaking down this 30.2% at 89.50. So it's also at its last support, so do not expect much from this particular counter. We did see a very nice looking green bar here, but it was followed by a sell down. So on a downtrend, we only see relief rallies, and if we do not start breaking back up, then it's unlikely it's possible for us to be creating this kind of patterns, and we will likely to be looking back towards this $71, which is not a good sign for its investors. So let's take a look at some of its resistance that is upcoming for 9988. So let's take a look. You can see that as of now, we have not even tested this 23.6 at 88. So we have yet to close this gap at 91, 93, and also this gap to be closed at 95. You can see that there's one gap here, there's another gap here. So there's two gaps for us to close before we can go back to test this $100 psychological resistance, and thereafter the high of 103.8. Bear in mind that earnings are coming up. I'm not exactly sure when, but perhaps this week or next week. But that will definitely come into play and do expect some volatility. As of now, we're still far away from this blue conversion line. It's currently sitting at 93.40, so do expect some resistance at 93.40. The red baseline is currently at 98.45. So these two will act as a very strong resistance for Alibaba at 9988. So supports to watch, we'll be looking at 82.40, and thereafter, if the $80 psychological support were to break down, and we are likely to be looking towards this 71 to retest the 52-week low once again. So lastly, let's take a look at Meituan 3690. So this is up about 6-7%. Not many people are invested in this particular counter, but it is actually one of those counters that hold up the index pretty well. So you can see that 103 was the low after it hit the high of 224. Looking on the left, there's this high here. The low here was 103. And we did not cross this 61.8%. So long as we do not cross this 61.8% at 178, then it's unlikely for us to remain bullish. But for now, it's looking pretty decent. We're up about almost 7%, 6.85% in fact. So the resistance to watch for Meituan will be currently 165 at 6.8%. Thereafter, we'll be looking at 170 psychological resistance and we test the high of 178. You can clearly see that Meituan is slightly above Alibaba and Tencent. It's really crossed both this red baseline and also this blue conversion line. So long as we are able to close above this blue conversion line 160.3 today, that will be a good sign, and we can continue to remain above this blue conversion line. As of now, you can see that we are inside the clouds, so do expect some resistance and some struggles along the way. Supports to watch for Meituan. On the way down, you can look at there is a particular support looking. So this will be a support that we'll be first watching, 144. Thereafter will be this 140 psychological support before testing this 131 or 132 rather at 38.2%, which is essentially this support as well, 23.6% on the long-term charts. And also this, if we do break down this 130, then we're likely to be seeing this 121, and thereafter we test the lows at 103.5, which is this 52-week low for Meituan. So as of now, we have to continue to watch the trend to look at this whether we can cross this 165, 170, and also this 178 for us to remain bullish. So we can clearly see that Tencent and Meituan is holding up both the index, while stocks like Alibaba is currently lagged behind these two particular counters. So if there's any changes, I'll give you guys an update. Thanks for stopping by, and don't forget to subscribe as you keep the uptrend of channel intact. Till we meet again, appreciate your manipulation.